What's going on, guys? So today we're going to be talking about Canopy Growth and Aurora, and we're going to be comparing both their earnings. So Canopy Growth earnings just came out and they were pretty disappointing. So we're going to be comparing both companies, both Canopy Growth and Aurora, and we're gonna see which company had the better earnings. Also, before we get this video started, let me know in the comment section what you guys thought about both their earnings. Which company do you think had the better earnings? And also, don't forget, give me a thumbs up, hit that notification bell, smash that subscribe button, and let's get this video started. So before we get started with these earnings, I want to be looking at both these companies real quick. So first we're going to be looking at Aurora Cannabis, and as you can see, Aurora Cannabis has consistently been downtrending. We have a support line right here, which is the red line, and we have a resistance line right here, which is the green line, and we've been consistently downtrending in between these two lines. Also, I do want to talk about a pattern that I did mention in my last Aurora Cannabis video, which you could see right here, where we had a triangle pattern forming right here, as you could see. And what I talked about in this triangle pattern was that Aurora Cannabis was going to have a breakthrough either in the downward or in the upward direction. So what did happen was Aurora Cannabis had a breakthrough in the downward direction. As you could see, it pretty much hit this $7 support line, and we're looking at Aurora Cannabis in American dollars right now. Hit this $7 support line and pretty much had a nice run right after. Then we went up and hit this downtrending resistance line that we've consistently seen in the past. It hit that and then immediately got rejected. So the real question is Aurora Cannabis going to continue to downtrend, possibly hit this support line again, or are we going to hit this green support line right here, which is the $7 support line that we've consistently seen Aurora Cannabis hit in the past? And Aurora Cannabis has consistently hit this support line at $7 in the past. This line has even acted as a resistance line here before. So we see a pretty similar pattern with Aurora Cannabis right now. We had a nice run, a nice uptrend, and now we're pretty much doing the complete opposite and we're having a nice downfall. I've made a video in the past where it could be possible that Aurora could be reaching $5 American. I do think that's very unlikely, but definitely now it's a possibility that we're going to be hitting the $7 support line. If we go below it, another possibility is the $6 support line right here. I'm going to do the same thing for Aurora Cannabis in Canadian dollars, and then we're going to also be looking at Canopy Growth. So right here is Aurora Cannabis in Canadian dollars, and the same consistent pattern. We had a nice uptrend, now we're downtrending. We've been consistently downtrending above this support line and below this resistance line right here. Same thing, we had a triangle pattern forming, the breakthrough, hit the support line right here, and then immediately had a run and hit this resistance line. Will it continue to downtrend on this line, or will it hit this $9.30 line and start making a run? Now for Aurora Cannabis, I'm looking at the MACD lines right now, and we are getting a sell signal. So we're gonna see, it's possible that Aurora can go down a little more. Aurora Cannabis is currently down 1.21% on the day, but either way, we're gonna go straight to Canopy Growth. We're gonna look at the Canopy Growth charts real quick, and for now I'm gonna be looking at CGC, currently sitting at $39.76. And for Canopy Growth, we currently have a support line at $38.75 right here, which is this green line. We've hit it 1-2 times. So as you can see right here, Canopy Growth has been downtrending ever since May. So now we're going to be looking at this article titled Aurora Cannabis versus Canopy Growth, comparing the two cannabis giants. We're also going to be looking at who weathered the winter quarter better, Aurora or Canopy Growth, which is why I asked you guys to let me know which company do you think had the better earnings. So right here we have the largest cannabis companies by enterprise value, and of course we have Canopy Growth, which is 18 billion, and Aurora Cannabis, which is 11 billion, the two biggest companies, followed by Tilray, Cronos, Curaleaf, Cresco, and we have MedMen in the bottom. So Aurora Cannabis versus Canopy Growth net revenue. As you can see, prior to legalization, they have both been consistently growing kind of at the same pace, and Canopy Growth has always been on top of Aurora Cannabis with net revenue. Blue is Aurora, and the green brownish is Canopy Growth. And right here, September 2018, Aurora Cannabis beat Canopy Growth for the first time ever, but then Canopy Growth had a nice jump December 2018. I'm not sure if that was because of the Constellation brand deal, but we're gonna read into it a little. So during the March quarter, Canopy Growth generated 94 million in net revenue, while Aurora Cannabis generated 65 million. So quarter over quarter, Canopy Growth grew by 13%, and Aurora Cannabis grew by 20%. But year over year, Canopy growth grew 312% and Aurora Cannabis grew 305%. So both companies showed solid growth quarter over quarter, but Aurora's growth was better in two respects. First, Aurora simply grew more, growing 20% compared to 13%. Second, Aurora's growth was through organic growth of the business, while Canopy's growth benefited from the tailwind of significantly higher non-cannabis revenue from acquisitions, including its 145 million euro acquisition of vaporizer manufacturer Stores and Bickles in December. Aurora revenue growth, including MedRelief. On the year-over-year basis, Canopy growth had a slight edge on Aurora's growth, but the edge widens when considering that Aurora's year-over-year growth benefited substantially with its 3.2 billion acquisition from MedRelief in July 2018. So as you can see right here, the green is MedRelief, the blue is Aurora Cannabis. At one point, MedRelief had more revenue than Aurora Cannabis. March 2017, 10.4 million for MedRelief, 5.2 million for Aurora Cannabis. And then it was finally in December 2017 that Aurora Cannabis had a little more revenue, 11.7 million versus 9.8 million. So Aurora's revenue growth drops 137% if you don't include MedRelief's revenue from the year-over-year growth. And right here's another very important graph, which we're looking at Aurora versus Canopy growth, sales and revenue by segment. The green equals recreational, the blue equals medical, the gray equals retail. So as you can see, looking at both companies, recreational Canopy growth has the upper hand, and medical Aurora Cannabis has the upper hand. When you're looking at the medical, it looks like Aurora Cannabis almost sold more than triple what Canopy was able to sell. They made $9.7 million in sales for medical versus $25.1 million in recreational sales for Aurora Cannabis. And then it's almost the opposite. Canopy growth did sell more in recreational versus Aurora Cannabis, which we're going to get into right now. So Canopy growth sold 6,964 kilograms, equivalent of recreational cannabis, earning approximately $46.7 million in net revenue. Canopy sold 29% more recreational cannabis than Aurora and earned approximately 58% more revenue from recreational cannabis sales than Aurora. Canopy growth has approximately 25% of the market share in the Canadian recreational cannabis market, while Aurora has approximately 20% of the market share. But now we're going to be looking at medical sales. And as you can see in the past, Canopy growth has had more medical sales than Aurora Cannabis. And then Aurora Cannabis slowly started growing, eventually took the top spot on September 2018. And Canopy growth has been declining ever since. So the results are flipped for medical cannabis. Aurora has a stronger medical cannabis business than Canopy growth, both in Canada and internationally. So during the last 3 quarters, Canopy's medical cannabis sales have slipped by 50%, while Aurora's reported results have risen by 133%. So Canopy has blamed these poor results on a sloppy changeover from using its main brands, for example Tweed, for medical cannabis to using the Spectrum Cannabis brand. So overall, the Canadian medical market has shrunk by approximately 7% between Q2 2018 and Q1 2019, based on sales figures from Health Canada. While Canopy growth has struggled, Aurora has done well in the medical cannabis market. The above charts exaggerate how well Aurora has done because much of its gains have been a result of acquiring MedRelief last July. MedRelief had a very strong medical cannabis business, which was approximately the same size as Aurora's own business. So as you can see right here from these charts, the green is MedRelief, the dotted blue is Aurora Cannabis, and then the dark blue right here is both of these companies combined. At one point, MedRelief had more medical cannabis sales than Aurora Cannabis. Eventually, they were pretty much even. Now, of course, they're combined since Aurora Cannabis owns MedRelief. So including MedRelief results from June 2018, Aurora's medical sales have increased by 24% in the past 3 quarters, while Canopy sales have dropped 50%. On a quarter-over-quarter basis, Aurora's medical cannabis sales rose 18% by weight and 12% by net revenue. Medical cannabis sales for the top 4 licensed producers, Aurora continues to rise, Canopy continues to decline. So right here's a chart that shows cannabis harvests. So how much have these companies produced? And right here we have 15,590 kilograms in March 2019 for Aurora Cannabis and 14,469,000 kilograms for Canopy Growth in March 2019. So until Q4 2018, Canopy Growth had a substantial lead on Aurora in growing cannabis. That is no longer the case, and the two companies are producing very similar amounts today. And now we're going to be looking at gross margins. Aurora has always been on top. and Canopy Growth's growth margins continue to decline. We've seen Aurora's gross margins decline the last few quarters, but slightly rose in its latest earnings. So Canopy has seen 3 consecutive quarters of gross margins decline, with gross margins hitting only 16% this quarter. Aurora's gross margins have also declined in 2 of those 3 quarters, but its gross margins are much higher than Canopy's at a relatively robust 56%. And now we're looking at the Canadian licensed producers by gross margins. On the top, we have Organigram with a 60% gross margin, Aurora Cannabis second place with 56%, and we see Canopy Growth at the very bottom right here, 16%. And now right here we have a chart which is Aurora versus Canopy Growth's gross profits, and of course we have Aurora Cannabis right here on top. And it seems like Aurora Cannabis has always had the lead on Canopy Growth. So despite Canopy Growth's higher revenue in each quarter, Aurora has consistently produced more gross profit than Canopy Growth thanks to higher gross margins. In Q1 2019, Aurora generated $36 million of gross profit on $65 million of net revenue. This was more than twice as much gross profit as Canopy Growth, which managed only $15 million gross profit on $94 million of net revenue. And profitability, as you can see, both these companies have not been profitable, and Canopy Growth has lost a lot more money than Aurora Cannabis, which they're going to talk about right here. Canopy Growth has a free cash flow deficit of $1.2 billion, while Aurora has a free cash flow deficit of $520 million, so more than double. Neither company is close to being profitable, with Canopy Growth further than Aurora from profitability. But according to Cam Batley, he did say that we do expect to be profitable in the next quarter, and we're going to see if that actually comes to reality. So based on the information we were given here, to me it seems to be that Aurora Cannabis has had the better quarter, and Aurora Cannabis has been growing more consistently than Canopy Growth. We've seen in the past Aurora Cannabis was producing, making more money. They were on top of Aurora Cannabis, excluding medical cannabis. And now we're starting to see Aurora Cannabis surpass Canopy Growth in a lot of things, like gross revenue, gross profit. They're going to start producing more. So I think Aurora Cannabis has the advantage in that way. But when you look at Canopy Growth, the one thing they do have an advantage on is in cash. Canopy Growth has a lot more cash sitting in the bank, which in a way gives them a small advantage if they use that cash in the right way. Another thing Canopy Growth has that Aurora Cannabis doesn't is they have a big company backing them up, like Constellation Brand. We all know Aurora Cannabis' strategy wasn't to give up so much equity to one company. They do plan to hopefully get more than one partner, probably giving them all small stakes in the company, which in the long term might pay off. Just by looking at these charts, to me, Aurora Cannabis seems like the better company. Obviously, Aurora Cannabis has their pros and cons, one of the cons being share dilution, which we have been punished. So if I were to invest in one or two of the companies right now, I personally would be investing into Aurora. But I do think obviously Aurora Cannabis is the cheaper company right now, and they do seem to be more promising. They do seem to be growing at a faster pace than Canopy Growth, and that's pretty much my opinion. So let me know your thoughts on these earnings. Let me know what you guys think. Also, if you guys enjoyed this video, don't forget, give me a thumbs up, hit that notification bell, smash that subscribe button. That's it for now, guys. I'll see you on my next video. Bye-bye.